Hello, good morning. Welcome to Almus Market Morning. This is Jayaram Krishnamurthy, sharing with you the major macro developments overnight and what's likely to happen in the markets today. Once I'm done, I will also have Mr. Nikunj Bharkala share his technical viewpoints on the market. So let me say this: two central banks considered as laggards of inflation fighting were finally moving on the rates, one quite expressively and the other in a subtle way. ECB moved to hike more than expected at 0.5% and introduced a new tool called transmission protection instrument, which is meant to protect some of the weaker peripheral countries whenever their bond yields look to go out of the roof. Besides, the market is also expecting another 0.5% hike in September. The hike as well as the potential further hikes are all aimed at bringing down inflation expectations and to restore ECB's damaged reputation and credibility as an inflation fighter. Yesterday's decision shows that ECB is more concerned about the credibility than about the predictability. ECB also moved to data dependency from rigid forward guidance, realizing that the rigid forward guidance in this world is a fool's errand. More surprisingly, with a subtle move, there are hints that Japan may be moving towards tightening in the coming months. It's very difficult to say when that will happen, but not very far, I feel. For the record, BOJ left its rates unchanged, also gave no sign of giving up on its unlimited bond buying program, but its new inflation forecasts are stronger than what the market's view is, which can keep speculation about a policy change alive for the upcoming meetings. They also said, the government, in fact, also appointed two new economists on the BOJ board who have earlier warned about side effects of bold monetary easing by the Bank of Japan. So actually, these are some things which I feel hinting at a gradual move towards tightening by Bank of Japan, as well the last guy probably among the major banks to move towards inflation fighting. You can see that the yen has quietly slipped below 138 yesterday, and technically possible losses towards 135.50. On other major news, Russia resumed pumping via its biggest pipeline to Europe on Thursday after a 10-day outage, allaying some of the immediate concerns, but not enough to end a threat of rationing to cope with the potential winter shortages in Europe. In US, the Ukraine is moving from center stage to just another passing news item, and they are more concerned about the midterm elections. It continues to look like the Democrats may be on the losing side, and one of the hints is that the lowest popularity rating to which Biden has fallen. We have more political news from Europe as well. Draghi finally tendered his resignation despite winning the vote of confidence, where three of the alliances did not vote. And this is the first time they are going to hold an election in the summer. That election will be held in September. And because they have not been able to pass some of the budget proposals, which are required to be fulfilled to meet the Europe's requirements. So that's some challenge. That is also a point for the ECB to consider going forward whenever they're managing their monetary policy. Then we have our own political development where Draupadi Murmu is being elected as the new president. Of course, she will take oath after some time. So those are about the political side, and dollar had a weak day, or rather I would say it's a mixed day. There was a time when dollar fell quite a bit, and after the ECB decision, euro reaching 1.0278. I think a second failure there in the last 1 week, fell back to 0.154 and now trading around 1.02. Generally, market seems to be slightly favoring the euro now because they're getting the confidence that ECB is on to fight the inflation, which was lacking for quite some time. We can, in general, say that the differential between dollar rates and the other countries' yields are actually narrowing down, somewhat putting the dollar on a corrective downward move. In fact, lots of data from US, the Philly Fed index, the uh, you know the jobless claims, as well as the leading indicator leading economic indicator index, all of them were soft yesterday. There was quite a bit of fall in the long-term yields, 10-year and 30-year, all of which actually supported other currencies to recover. In fact, surprise recovery in gold as well, which moved from around 1680 till 1715. Quite a bit of recovery there. Stock markets were positive, mainly led by good news from Tesla. Rupee, of course, second attempt above 80 was met with good selling once again from RBI. Interestingly, fourth successive day of FI positive flow, and of course, amounts have not been large, but yes, that's maybe I don't know whether it is a real turning point. Finally, looking at the market rally, whole world big analysts are debating whether this is a turnaround or it is another bear market rally. I think only time will tell. I'm still betting on it being a bear market rally. We have more interesting data today: UK retail sales, Canada retail sales, and then the PMI flash estimates from S&P Global coming up. Next week, of course, we have the mega event of Fed meeting, 0.75% hike expected, and then also we'll have US GDP. All in all, it was a very interesting week. Lots of volatility, a lot of policy changes, and more news to come next week. Have a nice weekend. Of course, we'll have Nikunj, who will share the key technical points for today's trading.
Yeah, good morning all, and welcome to the technical session of financial markets. I'll start with dollar index, as dollar has been a point of focus for quite some time, and looking at current levels, it is trading at 106.90. So last week we saw that dollar index went up as high as 109.30, and from there it dipped towards 106.4050 levels. Technically, if I were to say and look at weekly charts, I still believe the uptrend is still there, and possibly it may dip around 106 levels, and from there we'll again see a rally towards 109, 109.5 levels. So a dollar index as of now on medium term to short term chart still looks bullish. And relating other currencies to dollar index, I'll start with euro dollar. Euro dollar, after ECB yesterday hiked the rate by 50 basis points, it rallied by 60 pips, and then it again reversed towards the current levels of 1.0190. As far as technical points are concerned, we believe that 1.0280, 1.0290 is a very good area to cover your exports, and on the lower side it may again dip down to 1.01 figure levels. So possibly I believe that 1.03 and 1.01 can be the broader range wherein you can look to cover your exposures. Moving on to GBP USD, right now it is at 1.1968, but again it is trading in a slightly broader range of say 1.21 and 1.19. Overall, the trend is still bearish. Any upticks above 1.21 can be a good opportunity to go short, and on the lower side, I think 1.19 and 1.1850 can be seen soon. Now I'll be moving on to gold. So as Jayaram sir mentioned in his commentary that yesterday it just touched the multi-month low of 1.1680 and bounced from there towards 1.723. Right now it is trading at 1.713, and I believe that 1.680 should hold firmly. If at all it breaks, then possibly we are moving more $50-70 from this point, maybe towards 1.610, 1.620 levels. All in all, I intend to go along at current levels for 1.845, 1.850 levels. And if at all it has to reverse this short-term downtrend, I think cross above 1.845 will give a good up move till 1900 levels. Now moving on to our mother currency, that is dollar rupee, wherein all our focus is. Though dollar index is not directly one-to-one correlated with dollar rupee, but we have seen that we are seeing some type of strong resistance point at 80 figure levels. So since last 3-4 days, we are seeing dollar rupee moving above 80 levels, but again it is dipping and coming down. So exports can be hedged above 80 with a stop loss of 80-20. And if at all it crosses above 80-20, then 80-70 and 81 figure levels can be seen soon. On the lower side, the mean is towards 79.65. So if at all it has to hold 80 levels, 79.60, 65 can be seen. But yeah, the trend still remains bullish. And if at all there are short-term imports, 79.60, 65 can be looked at as an opportunity to go cover your imports. Yeah, that's it from my side.
Thank you, Nikunj. That's it, and have a nice weekend, all of you.